Distress in the office sector, potential distress in multifamily, and the overall rise in interest rates that's put a huge strain on commercial real estate values have all made headlines in 2023. But even though it might not seem like it, there are a few parts of this industry that are actually growing really quickly right now, and these aren't being talked about within these conversations. And if you're trying to land a job in commercial real estate today, these are places that a lot of people aren't looking right now and can be huge opportunities to get your foot in the door. So in this video, I want to break down what I see as the biggest career opportunities within commercial real estate heading into 2024 and why I like each of these for young real estate professionals. So the first big opportunity I see in 2024 is targeting a part of the industry that used to be an extremely small niche market, but has absolutely exploded in popularity over the last few years, and this is the commercial real estate secondaries market. Commercial real estate secondary investments involve the acquisition of existing partnership interests in commercial real estate funds, with investors often buying these interests from limited equity partners without a controlling interest in the operations of the fund. A traditional commercial real estate fund life might be something like 7 to 10 years, and towards the end of that time frame, it's not uncommon for LPs to want or need to exit their position early, usually due to either a want or a need for liquidity, or sometimes due to a lack of alignment with the general partner on the deal that's running the fund. And in these scenarios, secondary investors will come in and acquire that LP's interest in the partnership, often between about year 6 and year 10 of that fund life. And this means that secondary investors are able to invest in an existing portfolio of properties alongside an experienced operator acting as the GP in a fund without having to commit capital before assets are identified, which can significantly reduce risk for investors in these deals. And the popularity of this part of the business has grown tremendously over the last 15 years, and in total, the real estate secondaries market has grown by almost 12 times, up from just $11 billion in 2009 to $130 billion as of 2021. Late last month, Blackstone announced that it closed on its Strategic Partners Real Estate 8 fund, raising $2.6 billion to pursue real estate secondaries, and earlier this month, Ares Management announced a $3.3 billion raise of capital specifically to target real estate secondaries. And from a career perspective, working on secondary investments can be a great way to get exposed to a significant amount of transaction volume in a relatively short period of time, to get exposure to complex equity partnership structures that often exist only within larger funds, and to get exposure to real estate in multiple different markets and potentially different product types early on in your career. Now, these types of jobs are usually only going to be available at major private equity firms, so you'll most likely need to be in a major market like New York, Los Angeles, or Chicago to find these types of opportunities. But if you're looking to go the institutional route and you want to be exposed to complex deal structures early on in your career, working in the secondaries market could be a great way to make those things happen. Now, aside from real estate secondaries, the next career opportunity I see in 2024 is on the debt side of the business, specifically in mortgage loan production. This can involve working in mortgage brokerage or debt placement at a major commercial real estate intermediary like CBRE or JLL, but this could also involve working directly for a lender issuing loans to commercial real estate borrowers. Now, it's no secret that starting in the second half of 2022, commercial real estate loan origination volume absolutely fell off a cliff, but in 2024, I actually see this turning around regardless of whether or not rates start to fall. If rates stay higher for longer and remain elevated throughout the first half of the year, at this point, a lot of investors are finally going to accept that this might be how things are going to be for a while, meaning that sellers will start adjusting their pricing expectations downward and transaction activity will start to pick up as the bid-ask spread finally starts to narrow. And if this doesn't happen and the Fed does start to cut rates even just slightly, this will inevitably lead to an uptick in financing activity through either the financing of new acquisitions as that bid-ask spread narrows, or refinances of existing commercial real estate loans with upcoming loan maturities. A lot of mortgage brokerages and lenders that relied on originating new loans for a substantial portion of their business saw huge drops in revenue in 2023, and because of that, many of these companies either slowed hiring significantly or even laid off employees to compensate for the lack of business they saw this year. And while this was definitely not good news over the last 18 months, if there is a big uptick in financing activity in 2024 for either of the reasons that I mentioned, these companies are now going to need to quickly increase their headcount, especially at the analyst level, to keep up with demand related to these transactions. Debt side roles can also be great places to start out for people that don't know which product type they want to focus on most, since these types of positions will often expose you to all different kinds of real estate. And even if you're sure that you eventually want to work on the principal side of the business, having the perspective of a lender when working in acquisitions or asset management, or even when starting your own company, can be tremendously valuable when financing your deals. Now, the last big career opportunity I see in 2024 for people looking to break into commercial real estate for the first time or looking to move into a new role in acquisitions or development is focusing specifically on the retail sector. Unlike multifamily and industrial, which are both seeing major headwinds right now related to supply, retail real estate has some of the strongest fundamentals of any product type in the industry, with leasing availability at its lowest levels we've seen in over a decade and construction completions for retail projects continuing to fall year over year. In my experience, retail is probably the hardest commercial real estate product type to learn, with complex lease structures that can have huge impacts on a property's NOI or even other tenants within the same shopping center. And if you can figure out retail, understanding pretty much any other commercial real estate product type feels almost easy in comparison. Especially if you're interested in the industrial sector or the office sector, the skills you'll build in retail when it comes to reading and reviewing commercial leases and modeling out lease cash flows in either Argus or Excel will all be extremely transferable skills to these parts of the industry if you choose to switch gears later on in your career. Even if your long-term goal is to work in multifamily, many new residential developments include a ground floor retail component, and having experience with retail leasing, development, or acquisitions can all give you a valuable perspective to bring to these types of deals. Especially at a time when hiring across the commercial real estate industry in general has slowed down a lot over the last few years, looking for opportunities outside of the most popular product types like multifamily and industrial can be a great way to increase your chances of landing a full-time role in this environment. And even if you don't necessarily want to be in this part of the industry long term, taking a retail acquisitions or development role will allow you to learn the business and build transferable skills that you can then use when working on almost any other major product type throughout your career. So as 2023 finally comes to a close, I hope this is helpful if you're feeling a little bit pessimistic about the job search right now and you're looking for ways to increase your chances of success in 2024. And if you want to make sure that you have the technical skills that you'll need to land a job at a top real estate investment, development, or brokerage firm in the new year, as always, make sure to check out our all-in-one membership training platform, Breaking a CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Break into CRE Analyst Certification exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and you want to see more content on the channel on commercial real estate career opportunities, make sure to hit the like button and let me know in the comments which part of the business you're trying to land a job in 2024. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.